So I get asked a lot of questions about how homeowners insurance works in North Carolina because people have different views coming from other states. So I thought it would be a really good idea for everybody to meet my insurance broker. Her name is Julia Miller. So that way, when we start working together, you will have a face to put with the name. And so I'm going to ask her a few questions about how homeowners insurance works in the state of North Carolina. So let's get started. So, can you start by introducing yourself and explaining what you do as an insurance broker and how you help homeowners in North Carolina?
Absolutely. So my name is Julia Miller. I work for Goosehead Insurance in the Charlotte office, but I'm also licensed in South Carolina, Georgia, and Texas. And I am an insurance broker. So instead of working with one company and having like a favoritism towards one company, we work with about 50 plus carriers to find the best deals on homeowners insurance. The best way to guarantee the best deal is to do a bundle deal. So we like to look at auto insurance too to see if there are discounts, ways to save, things like that. We try and get the best deal for our clients and help them just understand what they're purchasing, why they need it, and how it can help them in the future.
All right, awesome. Yeah, so that leads me to my first question. So, when someone's buying their first home, what exactly does homeowners insurance cover?
So there are six main coverages. There's coverage A, which is the dwelling, which is just the outside of the property, how much it would take to rebuild it. There's coverage B, the other structures, things that are detached from the house, like the driveway, the fence, the shed, things like that. Coverage C is personal property, so your contents, everything that's inside the house, all of your stuff that you have. And then there's coverage D, loss of use. So if there was a total loss, you would get money to stay in like Airbnbs or hotels while your home is being rebuilt. Coverage E is personal liability. So if someone were to slip and fall on your property and decide to sue you, this would help with legal fees and things along that line. And then medical payments, if someone slipped and fell on your property and decided they didn't want to sue you, you could help them by paying for their medical bills. So that was a really quick rundown of the top six coverages.
Wow, so is that all like encompassed into one policy?
Yes, so those are included in the homeowner's policy, but we also have other things that we're able to add, like ordinance of law, water backup, and loss assessment, things like that. We can add things and then also like exclude things if based on what the client wants.
Wow. All right. That's pretty cool. So, one of the things that I hear a lot from soon to be homeowners is the expense of homeowners insurance. Like some of the states that they're moving from into North Carolina, they're like, wow, it's really, not what I was expecting. Or maybe they're just not, they're just really not too sure because of having those higher homeowner insurance premiums from the states they're moving from, like Florida, for example, maybe even California. So, what have you seen, or what do you think is like the misconception buyers have who are moving to North Carolina about homeowners insurance?
I think a lot of times deductibles come into play too. Like people think that just because someone recommends this deductible that you have to keep it there. Everything is customizable. We can play with every coverage because if someone has tight budget or wants a lower premium, we're able to move things around and just do whatever's best for the client. So I think the biggest misconception is that a quote is the end all be all, like that it's you can't move anything around or play with anything. Like I love to call my clients and be like, okay, let's go through all of this. And then I'm going to ask your opinion and we're going to mess around and get the perfect policy for you. No two policies are going to be the same. So I think just like thinking that the quote is like finalized right when they see it.
Okay. So what you're saying is like sometimes the quote might show like a lower deductible, like let's say 1,000 or 500 or 1,500.
Yes. Sometimes the quote can have a deductible that's like 1,500 or like 2,500 is pretty standard at our brokerage, but it can go up to the other day I had someone ask if they could do a 10% deductible, which was 51,000. So the deductible can go super high, but also if you feel more comfortable paying less out of pocket, the deductible can be 1,000 or 1,500. So it just kind of depends on what the home buyer wants and what they feel most comfortable with.
Wow. Okay. So like if someone saw the premium being like monthly, whatever, X amount, and they're just thinking, wow, that's just a little bit more than I wanted to spend, or that I really feel comfortable spending. Um, so could they do even a deductible that's not 51,000 or but more like maybe 5,000 or a $10,000 deductible?
Yeah, absolutely. If someone's like, oh, that's like $15 too much per month, or like not what I was thinking per month, the easiest thing for me to play with is the deductible. So we can move it up to 5,000 or 10,000 to decrease those monthly payments, or we can change some of the other coverages too, just to make sure that they have everything that they need so that they can meet their budget.
Okay, awesome. So it kind of leads me into the next question I was going to ask you about customizing the policy, which you've already answered that question. So, one other question I did have that just came to mind was when someone calls you, like if I refer someone to you and they call you, what kind of questions are you going to ask them to qualify for insurance? Is it kind of like applying for a credit card?
Not necessarily. There's definitely some like basic information required. So normally, they would give me a call, or I would give them a call and just be like, "Hey, this is my process. So on this first phone call, I'm gonna get some basic information from you. So like your name, your new address. I want to learn about you. I want to, have you feel a connection. I don't want to just be a robot behind a screen. So I ask you like name, address, if anyone's moving with you, if you have any pets or any random things about the house. A lot of times I ask about the roof year and things that go along with that. And then I'll say, like, okay, now I'm going to go shop around the market and see the best deal that I can find for you. And then on our next phone call, we're going to go into the coverages, customize it your way, and make sure that we have the best policy for you. And then after that, I can work with Kristen or Kristen's lender to figure out how to just put it away on the back end so that you don't even have to think about it anymore. And it's just like your hands are clean and you got your policy and you're all ready to move. So,
Okay. Okay, great. So you're not necessarily pulling credit and like trying to figure out like debt to income ratio or anything like that.
not necessarily. Sometimes if the lender will say like, "Oh, this is what we would like the premium to be," just because of like issues on the clients, and then we'll try our best to like match that and like figure out how we can get it as low as possible.
And you had mentioned something about roofs, and that led me to another question that I had. I've had issues in the past, like 3 years ago, with homes that had roofs that were older than 10 years old, even though they had like a 30-year three-tabbed architectural shingle roof. And let's say the roof was 15 years old or 18 years old, it wasn't that magic 10 years or less. And insurance companies, I just found like nationwide ones wouldn't, not the company Nationwide, but like nationwide insurance
Mhm.
companies would not be able to provide coverage, like any homeowners insurance whatsoever. So if I run into a situation where there's a house for sale and the year of the roof is, we think, 15 years, um, would you be able to still help people be able to provide health insurance, or I'm sorry, homeowners insurance if the roof was 15 years old or older than 10 years old?
Yes. So the biggest recommendation that I have is to try and have the roof as new as possible just because it makes your premiums lower every month. But we do have carriers that will take like 20 to 25 years, so a little bit older than that, like 10 to 15-year mark. A lot of our carriers do prefer the like 10 years or less, but we do have options for 20 to 25 years. But after that mark, it is harder to find coverage. But we still have a couple carriers that will take like older roofs. But my biggest recommendation is just to try and negotiate in a new roof at closing or something like that, just so I can see. That's how you can see the biggest drop in your premium every month.
Okay. So if that were to happen where, let's just say the roof was 15 or 20 years old and there was just no way that the seller was going to be able to give any kind of like credit at close or um, be able to have the roof replaced prior to closing, and then it's on the homeowner, the new person owning the house, to have the insurance. So would it work like where it would be almost kind of like prorated? Like if you think that the roof is, let's say, a 30-year roof, but we know it's 25 years old. So the next year we have a hailstorm and the roof is deemed a loss, I guess. So would then the homeowner only be able to have almost kind of like 5 years prorated of the whole cost of the roof? Is that how that would work with the other insurance companies that you're thinking about?
Not necessarily. If there was like, if the roof was 25 years old and then the next year they experience like a hailstorm or something like that, they are able to file a claim to try and get the roof fully redone. So they'll pay like their deductible out of pocket and then insurance would pay for the rest. So they can get like a fully new roof and then it will be a brand new roof from that. But it's not necessarily like a prorated rate. It's more of like a you pay the deductible and then the insurance company steps in and covers the replacement.
Okay. Whatever they would think the replacement is, right?
Yes.
Okay. All
Yeah.
right, gotcha. Okay. All right. So that leads me to another question is we've had two hurricanes out in the Atlantic. Luckily, they stayed out that way. And luckily here in the Triad area, we're still pretty far inland and protected from the mountains,
Mhm.
more so than being on the coast of North Carolina. So what are you seeing in terms of cost factors for homeowners insurance in this part of North Carolina?
I think a lot of it just depends on like where you live. Some of our carriers will not offer coverage for like a super coastal home or the premium will just be a little bit higher, but that comes with like if you want to live right on the beach, your premium's probably just going to be a little bit higher. Um yeah, mostly location is the most important factor or like if there's about to be a hurricane or something like that, we've gotten some emails from our carriers that are like, hey, we're stopping all services in these zip codes for a week until everything like finishes with the hurricane because we were just supposed to have one. So things like that, there's not necessarily like a huge cost factor with it, but if you live more coastal or things like that, it's a little bit more expensive. The mountains also the same. Sometimes it's hard to find coverage because it's a bigger risk with like fires or just being really sheltered with a bunch of trees everywhere. So things like that. But that is, yeah, my thoughts.
Okay. All right, great. You had mentioned that there are ways to save in a premium, not just like with the deductible, but bundling, like between having your homeowners insurance and your car insurance together. Are there any other ways to save an insurance cost? Any kind of other discounts or bundles that come to mind?
Yeah, yeah, absolutely. Doing a home and auto bundle is the best way to save. A lot of our carriers give a couple hundred to even $1,000 discounts by doing that bundle, but there are many other ways to save. So it just depends on the carrier. A lot of the questions are like military discounts, or if you live in a gated community and there's like 24/7 security that would call the police straight away, that gives a discount. A lot of people ask if they have automatic water shut-off devices. So these are like what you plug into the wall, and then if your home was flooding, they would automatically like shut off and like send a signal, that kind of thing. That can add discounts. So it definitely depends on the carrier, but there are a lot of random little discounts that we can add in there. That's why one of the most important things is to be able to just talk to the client directly and get to ask them all of the like random questions, just because it does depend on the carrier. But there are so many discounts that are out there. It's like people never really know, and I never really knew before I stepped into the insurance industry. So it was really interesting to just learn about, the companies really want to help you, and they'll try and throw in discounts as much as possible.
Mhm. Okay. All right. Awesome. What has your experience been seeing the claims process? Like, are you involved with that at all when a client does have a claim, and what does that look like?
Yeah, so one of the actual like best benefits of working with a broker is that if you have an issue at your house and you're like, "Hey, I don't really know what to do." I'm your agent. I'm always going to answer the phone and talk you through it. But if I can't answer, I can transfer you to our service team. So our service team is great. They have all of the answers that I don't, and they are actually able to walk you through everything. So if you think you see a little bit of mold in your house and you're like, "I don't know what to do. Should I call Progressive? Should I file a claim?" The service team can be like, well, if you just look at this is how much it would cost. So filing a claim is kind of pointless because X, Y, and Z, and it'll just increase your premium. So instead of them just being like, oh, claim, let's increase your premium, they can just give you the best advice and their recommendations on what are the next steps and is it really worth it to file a claim if you're just going to end up paying like a couple $100 out of pocket.
Mhm. Okay. All right. Great. So my next question for you is those who have like investment properties or want to have like a second home or a vacation home, how does that kind of insurance work? Are they able to do like a bundle type? Like, are they able to piggyback on their homeowners insurance for their primary residence along with either an investment property or vacation, or is that a separate property, or I'm sorry, a separate policy altogether?
They would be separate policies. They're different for investment versus like a second home. So in a second home situation, we could just add like, oh, it's a seasonal, a secondary home, and then we just ask like how often you're there, like if it's rented out or anything like that. For an investment property, it is a different type of policy. So it's like a DP versus an HO because it's a dwelling property, so it's rented out to other people, things like that. So there are lots of options for both of those, but they are separate policies. But we do investment properties like multiple times a day in my office. So we see that all the time. And then a lot of times people will buy a secondary home and then call us back and be like, "Hey, we have a new house. Like we want you guys to insure it." And it's super easy, super simple, same type of process, just a little bit of a different question like for investment if there's like a property manager or things like that. So just some random questions based on the carriers again.
Okay, awesome. Okay, so my last question for you is what would you give as advice to a homeowner who's looking to buy home insurance in North Carolina?
My best advice is always try and get more than one option. So that's why, like, before I went into insurance, I probably would have just called a random company, gotten the option, and been like, that sounds good. But I truly think that, like, working with a broker in anything you do is super helpful because they have access to just so many different things. Like, I can find a bundle deal or just the homeowners and try and get the premium as low as possible, like that kind of thing. So just in my opinion, I think like working with a broker is a really good way to just understand the market and learn about like what other options there are out there and why the option that like we've found is the best one for you. So I guess maybe that's a little biased because I am a broker, but it truly is really helpful being able to be like, oh, this is Progressive's rate versus Safeco's rate versus Traveler's rate. And then being like, oh, wow, that's really interesting. Like I was going to call all three of them separately. So it's really nice that I was able to just like find it already and like understand that like you don't have to go through the process so many different times too.
Okay, awesome. Well, I really appreciate you taking the time to sit down and talk with me about these different homeowners insurance questions. Like I mentioned, these are questions I get asked all the time, and it's just really great to be able to get you on camera and put a face to your name and share all this great information. So I thank you.
Yes, absolutely. I know. I'm so glad I was able to help. Feel like before I stepped into insurance, I had no idea what was going on, and I've learned so much, and it's awesome to be able to just like help share and just learn so that people can understand what they're paying for and why they need it. So,
All right, awesome. Cool. Well, until the next video, we'll catch you later.
catch you later.